rupee has been consistently falling in comparison with the dollar. Of course, this has been the trend since independence. But what is more striking is its fall in the recent months. In fact, in 2025, till now, the rupee value in comparison with dollar has declined by 5.3%. Well, for the before I get into the reasons for the current decline, let me tell you the story of rupee. At the time of independence, $1 was equivalent to around 3.3 rupees. So this was at the time of independence. Many still feel that 1 rupee was equal to $1 at the time of independence. That is not true. So it was in 1947. In fact, at that point in time, rupee was measured in comparison with the pound sterling rather than dollar. But when you adjust the price and try to correlate it to dollar, you will get $1 is equivalent to 3.3 rupees. By 1950, the value has declined to 4.76 rupees per dollar. And this has further declined to 7.5 rupees per dollar in 1966. By 1990, it has come down to 17.5 rupees per dollar. And suddenly in a year, due to economic liberalization, the price of the exchange value of rupee in comparison with dollar is left to market forces. This resulted in the sharp decline. In 1991, it was around 22.7. So there was around 5 rupee decline in just 1 year during the period of economic liberalization. So this is the story, and it has been falling. So it has been falling since then, and now it touched 90 rupees per dollar. So let me now come to the reasons for this. Why this decline? Well, as I told you, it has been declining right from the independence, but the decline is quite sharp in the recent months. Normally, whenever such a volatility is found in the value of rupee, especially when the rupee declines, the Reserve Bank of India, RBI, the central bank of the country, intervenes to stabilize the value of rupee. What do you mean by intervention? So what is the value of dollar to rupee? It is simply the value of demand and supply of these two currencies in the global currency market. So when there is a huge demand for dollars, the value of rupee declines. Or when there is a short supply when there is a shortage in the supply of dollars, then also the value of the rupee declines. So therefore, whenever the value of rupee declines, the Reserve Bank of India offloads the dollars it has in its foreign exchange reserves. Every central bank of every country keeps foreign exchange reserves. Foreign exchange reserves not just necessarily be dollars, it can be euro, it can be other currencies, and even gold is included in the foreign exchange reserves. But dollar constitute the most part of the foreign exchange reserves of any country, including India. So what does the Reserve Bank do when the value of the rupee is sharply declining? RBI offloads, RBI sells dollars which it possesses in its reserves, therefore increasing the supply of dollars and stabilizing the value of rupee. So between 2023-24 financial year to 24-25, by the end of the financial year 25, that is within a period of 2 financial years, on an average, RBI has sold $43 billion of foreign exchange every month. So that has been the level of intervention of the Reserve Bank of India to stabilize the value of rupee. This has now sharply come down. It is now in this financial year, from April to November, the RBI has been selling not more than just around $10.5 billion per month. So see, from where is 43 billion, where is 10.5 billion? So the earlier RBI used to intervene 4 times more. So why is RBI doing like this? Because RBI or the government of India believes that the rupee fall in the value of rupee is actually good for the country. So that is an economic thinking. Look at the State Bank of India research. SBI is a public-owned, government-owned bank. The SBI research says declining value of rupee need not necessarily mean weakening of the rupee. So the economic thinking, underlying economic thinking is that the value of the rupee, if it declines, it will benefit the exporters, because due to Trump tariffs, there has been a significant adverse impact on India's exports. As a result, the trade deficit is rising. In October 2025, the trade deficit rose to $41 billion, one of the highest in the recent past. So the thinking in the government circles in the Reserve Bank of India is that the lower the value of rupee, the better will be the exporters. But this need not necessarily happen, because at a time when the global demand is sluggish due to the Trump-induced tariff chaos, just because the rupee value declines, the India's goods or services did not necessarily become competitive. So the export depend on many factors, not just on the value of the rupee in comparison to the dollar. So therefore, even though the value of rupee is declining, our export performance is not improving. So disproving the economic validity of the economic thinking of the ruling dispensation. So, but however, the Reserve Bank of India, the policy circles believe that undervalue of valuing rupee is essential to promote exports. In fact, there is a belief that rupee is already overvalued. So therefore, there is even talk, some of the experts interpret that the value of the rupee even may fall even up to 95 rupees per dollar also. So this is the first reason when RBI refuses to intervene adequately to protect the rupee, to defend the rupee, so the rupee value further decelerates. Then let me come to the second point. So the uncertainty over Indo-American trade deal is costing rupee a lot, because the India-America trade deal is very much to do with India's ability to earn dollars. So therefore, the uncertainty over the trade deal, the ever postponing deadlines, the confusion that still remain is hurting the rupee a lot. Well, in fact, this is the time when the dollar is actually in the 2025, the value of the dollar has declined by around 10%. So, of course, in the recent past, the value of dollar is improving, but overall the dollar is not performing so great. In fact, in rupee is the worst performing currency in the entire Asian continent, one of the worst performing currencies in the world today. So the reason is India is one of the countries India is the country which has highest Trump tariffs. Trump imposed 50% tariffs in India, whereas it is 30% on China, 20% on Vietnam, 19% on Indonesia, 15% on Japan. So India is yet to strike a trade deal with United States, whereas the countries like Pakistan, Japan, Indonesia, Vietnam, Canada, European Union, United Kingdom, many of these nations have already arrived at a trade deal with the United States. So therefore, that is the second factor that is hurting the rupee. And the third factor is the exit of the foreign investors. In fact, India has witnessed, especially the Indian stock market has witnessed a massive inflow of foreign investment in the at least for a period of 2 years. So that honeymoon period is gone. Today, foreign investors are pulling off Indian markets, both from the stock market and also from the private equity markets. So as a result, what is happening today? We are witnessing a massive exit of the foreign investors. For example, in this year itself till now, the total volume of foreign investors investment that left Indian markets is to the tune of $18 billion, $18 billion. So when the foreign investor pulls off, what will happen? He will convert the rupees into dollars and take away the dollars. So there is huge demand for dollars, whereas the supply will not is not commensurate. So that is the third factor. The foreign investors pulling off of Indian market is the third factor for this kind of a situation the rupee faces. The fourth factor is the rising import bill. When we import more, when we need more dollars, that itself means there is a greater demand for dollars. So the metal prices and the bullion prices, the gold and silver prices, are rising astronomically. We are witnessing a phase where the metal prices, including the gold and silver, are almost at the record levels. So as a result, the import bill increases, and import bill results in greater demand for dollars. That's the fourth problem. Fifth problem is, as I already explained, the export competitiveness has not improved due to Trump tariffs and sluggish global demand. India is unable to export more. So as a result, we are unable to earn more dollars also. So when we are unable to earn more dollars, then obviously in India the value of the rupee declines. Well, the sixth reason is the value of dollar has been strengthening in the recent past. In fact, the dollar has been sliding in the entire 2025 thanks to Trump economic policies. The value of the dollar has declined by around 10%. But in the recent past, at least in the last 1 or 2 months, the dollar is getting strengthened. So when the dollar gets strengthened, obviously that adversely impacts the value of rupee. Then the seventh factor is the structural factors. Well, everybody gets it out. GDP figures in India are quite impressive. In the latest quarter, India's GDP registered by 8.2%, which is significantly high compared to any economy in the world, including that of China. So the inflation is reasonably at a very low level. So then what's the problem when Indian economy is reflecting such robust numbers? So why is that the rupee value is declining? But we have to understand the difference between GDP and the value of rupee. India's GDP is primarily determined by the domestic factors. Indian economy enjoys three things: domestic consumption, domestic investment, domestic savings. So therefore, India is largely inward-looking economy. The exports or the FDI or foreign investment do not play an overwhelming role in the Indian economy because of the vast domestic market India has. Therefore, even when the GDP improves, it doesn't reflect on the value of rupee, because when the GDP is impacted by the domestic factors, the rupee is impacted by the external factors. The value of the rupee primarily depends on the foreign investment flows, the demand for dollar, foreign trade scenario, the global demand patterns, etc., etc. Of course, the confidence in the Indian economy among the foreign investors also matter. I am not telling that the domestic factors do not at all matter, but relatively the external factors define the value of rupee. So therefore, there is therefore this incongruency between the value of rupee and the GDP momentum. So but the problem is Indian economy suffers from two structural constraints. One is the low productivity. The two is the inflation relatively still higher compared with its trading partners. Well, inflation may be low in our country, but when compared with the trading partners, still India's inflation is higher. So when compared with India's trading partners, there is a huge productivity gap. So these structural constraints also adversely impact on the rupee. That's the reason why the value of rupee has always been declining. On a longer scale, there may be periods of little bit rise in the value of rupee, but if you compare it on a time scale, you will clearly find the value of rupee has always been declining.